Patience is a very important key concept when it comes to trading, and in this video we will be speaking about which are the best habits to make sure that you're always a patient trader. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily, so I suggest you subscribe and I will see you in the video. Okay, so let's speak about the habits that you're supposed to be having when you are approaching the market, and then I will also give you a full breakdown of EURJPY because it's a very interesting pair to follow at the moment for a potential trading opportunity. So let's start by which are the habits that you're supposed to have as a trader. Now, when it comes to trading, obviously it depends if you are a day trader or a swing trader. If you are a day trader, you need to know exactly when you have to scan your watch list for a potential trading opportunity. So let's say it's every hour, it's every 2 hours, that depends from your own strategy. And you need to know on your schedule that every hour you have to rescan the watch list. That is why day trading can be a little bit more stressful, because you have to scan the watch list more often. On the other side, if you are a swing trader, for example, I will tell you what our schedule actually is. So these are my daily habits as a swing trader. Now, just before the Asian session, I have to scan the complete watch list. Okay, I have to scan the watch list and find the pairs that are near to satisfying my rules. If I have a pair that is near to satisfying my rules, I put it on watch list. And once I have put it on watch list for the next day, that is the pair that I will be, or the pairs that I will be following the next day. Now, when it comes to scanning the watch list, since we have very strict rules, it only takes me between 15 minutes and 25 minutes to scan all 70 pairs that we have on watch list. Okay, so it's very, very quick. Just before the Asian session, I know which pairs are on watch list, and then what is my habit during the trading sessions of the next day. Now, most of the times the Asian session, there will be no need to monitor because price more or less is not moving, so I don't need to check. But the next day, when am I supposed to be checking for trading opportunities on the pairs that I have already selected the previous day? I will only have to check every 4 hours. Now, how do I know when do I have to check? Here, as you can see, there is a timer, okay, near the price. So in 1 hour and 13 minutes, I will have to check if EURJPY is satisfying our rules for entry. Then after that, I'm free for another 4 hours, and then I again have to check. Now, checking things, it takes me around 1 to 2 minutes. If I have many pairs on watch list, it can take me maximum 5 minutes. So I just have to work 5 minutes every 4 hours to be swing trading, because I have already selected the pair the night before. And then the next day, I only have to check every 4 hours for 5 minutes to see if my rules are satisfied. If they are satisfied, I just place my pending order on the other side. If they're not, I just have to check again in another 4 hours. So this is basically my habit as a swing trader. When it comes to day trading, I have to scan the watch list every 1 hour, and that is quicker. It takes me around 5 minutes to scan it. But I mean, anyway, every 1 hour I have to do it. That is why I don't really day trade every single day. I'll always take days off because it's a little bit more stressful, but obviously there can be more opportunity. Very often there is more opportunity. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. So let's make a full breakdown on EURJPY and the situation that we currently have. Now, why it is a very interesting pair. Now, first of all, from a monthly perspective, it is a pair that has provided this candle here. So a candle with a very long wick. Now, when you have a candle like this, you expect the next one to fill in the wick. This is a pattern that you see over and over again in the market. The next candle is supposed to fill in the wick because on lower time frames, you will have an impulse and correction pattern. So on the monthly, we overall have a bullish scenario also because the market has rejected the previous low, therefore creating a double bottom here. So we can expect more continuation. The only resistance that we actually have is the previous high, which yes, the market has rejected, which obviously is a negative confluence for the continuation to the upside. So the market might fail to actually fill in the wick because we have this resistance here, but overall we have more confluences on the long side than on the short side from a monthly perspective. Doesn't mean that the market must fill in the wick, but there is good possibility that it will actually do it. Let's go down on the weekly time frame by knowing what we already have on the monthly. On the weekly time frame, we can see that the market has provided this nice impulse followed by a retracement. Now, if you have an impulse and you want to measure the retracement, what are you supposed to be doing? Taking your Fibonacci from the low to the high of the impulse. And what you can see that the market retraced exactly to the 50% retracement before starting the next move to the upside. Now, what did we expect the market to actually retrace to the 50% before starting the next move to the upside? Because this was a strong structure level in the past. It was acting as perfect resistance here, perfect support here. Obviously here there is choppiness, but this was the Fibonacci level that was aligning pretty well with structure. So we definitely expected this one to actually hold. If we go down on the daily time frame, what we can see. Now, from a daily perspective, there is one structure level which is very, very clear inside of this retracement, which is this structure level here. Now, this was acting as very strong support here, broke to the downside, turned resistance, broke back up, and was turned support at this level. Now, if you want to be looking for the continuation to the upside, this is a very good area to be monitoring for a potential trading opportunity. But before I show you how we will be approaching this situation, let's go and see what we have from a COT perspective, so commitment of traders, what big banks and institutions are currently doing in the market. Now, if we check what we have from a euro perspective, we can see that currently we're sitting with 118k net positions. So hedge funds at the moment have way more longs than shorts. And if we check out what was happening, we went from minus 114k net positions all the way up to plus 118k net positions. So from having way more shorts than longs to having way more longs than shorts from an institutional perspective on the euro. And if we go and see what we have from a JPY perspective, we can see that we had the completely opposite, the very similar thing, because we went from minus 56k net positions all the way up to plus 27k net positions. So again, from having more shorts than longs to having more longs than shorts, with 50k longs at the moment and 23k shorts. So that is kind of a negative confluence because we have the JPY in the long term getting stronger. So strong JPY, EURJPY to the downside. However, there's one important thing to notice. In the short term, we can see a decrease in the net positions. So why are we having a decrease? Because mainly they have been closing thousands of longs with these two reports. The first closed 13k longs and then another 5k longs, bringing the exposure all the way down to 31%. And to the short side, we can see that the exposure is actually decreasing, which is not very good. So overall, even though we definitely would like to see the continuation to the upside, we must realize that from a JPY perspective, we have a negative confluence because we don't know if the JPY will become weaker than the euro or the euro will become weaker than the JPY. So, but that is always like this, okay? You will always have some negative confluence on a trade. It's never always 100% positive. And that is why trading in general is not predictive, it's reactive. You can find the best confluences as possible and then you wait for the proper confirmations before you take the trade to make sure that you took the trade by stacking up as many confluences in your favor as possible. Now, if we go down on the 4-hour time frame, and always remember, monthly, weekly, and daily are for direction. The 4 hours is the best time frame for entry. What we can see now on the 4 hours, we can see that currently this structure is bearish. The market has created this head and shoulders, so we might see the continuation to the downside. At the moment, there is no opportunity for any longing situation. So how we will be approaching this with students? Now, we already said that here we have strong support. Now, if on the 4-hour time frame everything will remain as it is right now, then the market will easily break below this area. Okay, if everything remains as it is right now, as we have just seen on the 4-hour, everything is bearish, so the market will easily break below this area. However, things might change on the 4-hour time frame, and that is exactly what we will be waiting for with students. If the market will actually, if euro will actually get stronger than the JPY, and on the 4-hour time frame the market will shift from a bearish market to a bullish market inside of this area, then we will be waiting for the market to provide to us one of our valid entries after adding EURJPY on watch list, and we will be taking a nice long with a very good risk to reward at that point and very good probabilities, because all time frames are showing the same direction, for the move to the upside with students to capitalize on the possible move to the upside. But as we're speaking, everything is bearish, so we can't be looking for any longs yet. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them with me each and every day. In fact, I give you a complete market breakdown showing you exactly how to apply the strategies with entry, stop, take profit, and I also answer every single question that you have every day, including the weekends. So it's a very complete program. I suggest you go and check it out. Link is in the description, or I will see you in the next video.